Hey traders, it's Heather. Somebody needs to call Tom Petty because today we were free falling. SPX closed 2.65% lower. NASDAQ did even worse, down almost 5% on the day. Now, I was with you last night, and let me go back to SPX because yesterday we were 200 points higher at the close. And I said, I gave you the weekly levels of the quant pivots. We were way up here, 75, 84. Man, the good old days. And I said, look, I'll give you the H1 and the L1 on the weekly quant pivots, but I don't think we get near either one of them because they are so far away. The L1 is at 74.92. I said, they're just too far away. And here we are. Not only did we break below the L1, we also broke and closed below the L2, which is at 74.12. How often does SPX close below the weekly L2? Only about 5.7% of the time. Now, we did get quite a few of those closes below the L2 back in March during that sell-off, but it is a rare thing indeed. I will point out, while I didn't think that we would break even that first level, I also did throw in a little caveat, which was, even though it's a long ways away, we don't get a heads up before we get those big moves, right? So we don't see them coming. So I said, even though I don't see it, we never see it. When do we ever see a big move coming? I can't recall a time that I've ever seen a big move in either direction before it happened. So just let that be a little bit of a reminder in either direction. When we're surprised, we're all surprised together, right? So look, what happened? Financial media is going to tell you that this was a result of a really strong jobs report that came out this morning and put the fear of a hawkish Fed into the minds of traders. That's not untrue. But it's really just the catalyst that caused what the technicals were already setting up for. So if we take a look at the dollar, it's kind of been setting up for a move higher, and sure enough, it did hit 100 today. What I really want to point out, though, is this put call ratio, because it's been incredibly low. Just as a reminder, I'm not paying attention to the actual candles on the put call ratio. I'm paying attention to this moving average. This is the daily 8 EMA. And when that moving average gets below this line of 0.7, it just means that traders are overwhelmingly more bullish than bearish. There are a lot more calls, open calls, than there are open puts. And when that happens, eventually we hit a point where there's nobody left in the market to buy. And so as they close out those positions, that can create selling in the market as we see that moving average go higher, right? It doesn't take a whole lot of energy for the market to go down. It does take a lot of energy for the market to go higher. It doesn't take a whole lot of energy for the market to go lower. All that it requires is that traders do nothing, or that they close out their bullish positions. So I think that is really more of what we saw today. Now look, this is still, it's not done, okay? This moving average is still very much below that 0.7 line. So I'm going to continue to watch it. Okay. I think we can definitely see some more downside, but let's talk about what could potentially happen in SPX over the next couple of weeks. Okay. So if we look at the Trader's Almanac, the Stock Trader's Almanac, you know that I talk about this I'm pretty much going to talk about this every time I'm doing a video for you, because I think it's a good thing to know just where we're at. It's not a crystal ball, but it's right a lot. And this week it was right every single day. So next week, it's actually showing a bullish day for Monday and bearish on Tuesday and Wednesday. Again, it's not a crystal ball, but I think we have a good chance of those 3 days being correct, okay? I think it would be reasonable to get a bounce on Monday. I'm not talking about all of this damage being undone. I'm not talking about coming all the way back up to where we were yesterday, Thursday. But could we just get a little bounce? Could we just get like a little harami candle right in there, a little inside candle? Maybe we get more than that. Maybe we do, but I definitely think it's reasonable after a 200-point move lower for maybe some of these shorts that came in today to just take some really quick profits, and maybe we get back above this daily 21, which is at 74.45 potentially. Okay. What could also happen is, we were talking about this in the small lot trading room today. If I zoom back out, this was an amazing rally that we had through April and May. There are a lot of people right now that are part-time traders that aren't as smart as you are. Maybe they're not traders at all, but they like to throw their money into the stock market from time to time, buy a few shares here, a few shares there. I'm talking about your neighbor, your Uber driver, your aunt, your uncle, okay? All of those people, their feelings are really hurt right now. They're feeling a lot of FOMO because they missed out on this rally. So what happens when they see a drop like today? They say, with all of that FOMO swirling around in their head, they say, this is my chance to finally buy the dip and get long so that I can get a piece of this, right? So I wouldn't be surprised if we were to get one more all-time high. It might happen next week, might happen the week after that, before we really roll over. So I just want you to pay attention to that. If we do get another all-time high in the next couple of weeks, for me, I'm looking to use that opportunity to get short. At the very least, just put on a little hedge. Okay, if you're not buying it, maybe just buy a hedge to protect any other longs in your book. Okay. If we get a little dip or a little bounce on Monday, I do want to use that as an opportunity to get short just into Tuesday and Wednesday, just going off of the Stock Trader's Almanac. So that won't be a big position. It won't be, I'm not going to be looking for anything massively lower, just lower than wherever we are on Monday, if we do get that bounce. So just kind of think about that, take it into consideration. Okay, what else can we do? All right, so tech is going lower, right? I think that the party in tech is probably over. Doesn't mean everything's going to die off. I just think that the party is over. Okay, MU was down 13% today, came down to its daily 21. We could see a little bit more lower. But, it doesn't need to be dramatic or drastic. I just think that the party is over in chips. Yesterday I said that NVIDIA looked good. I don't think it looks as good anymore. Marvell, it's still pretty high up there, even though it moved lower 16, almost 17% today. It's still really high up there though. Okay, so I think the party is over. That doesn't mean that there aren't other places that we could put our money in bullish positions, okay? I think we're probably going to see some good moves in consumer staples. We were looking at CVS today. CVS is looking really good. It's all the way up at +2 ATR. But look at this. It is developing, as of today, an ideal squeeze on the daily chart. So let's say, this is just an idea. Obviously, I'm not a fortune teller, so I don't know what's going to actually happen. But let's say on Monday, the market and tech does get that little bounce, a little recovery bounce on Monday. And with that, maybe CVS drops a little bit. You could use that, and I might be using that as an opportunity to buy it and look for these highs right here to be taken out. It looks like that's probably at about 99. I think 100 would be a really natural target for CVS. Coca-Cola also had a nice day, up 3.5%. Okay, this could be another nice place to get long. Had a really nice bounce off of the weekly 21 this week. So that could be something to look at. What else looks really good? Healthcare has been looking really good. I'm going to switch up my chart a little bit just so I can zoom out. Okay, so it's up at +3 ATR on the daily chart. But look, if we look at the weekly I think looks better. Formed this double bottom off of the weekly 50, closed above the weekly 21. I think it might be ready to retest these highs up at 160. Okay, so what looks good inside of XLV? United Health looks good. Looks really good. Look at this little rounding bottom right down to the daily 21. And it's about to get up to this little pivot high right here. Some little targets above, 417, there's a snow line. 432, there's another snow line. And then way up here, we've got a fire line at 456. But check this out. Nice ideal squeeze on the daily chart with momentum going higher. So I think that looks great as well. So there's definitely some places to put your money if you still want to be bullish stocks, even if the overall market is going down or chopping sideways, or not quite as drunk and happy as it was in March and April. There are still some places to put your money, even if tech needs to sit down and cool its jets for a little while. Okay, so that's what I have for you. I hope you have a great weekend. Make sure to look over your week of trades, not just the P&L, but really examine what you did well, what you didn't do so well, and what you're going to do better next week. Okay, think about the process, not just the profits. All right. Enjoy some time with your family, with your friends, and make sure to get some rest, because I have a feeling next week is going to be a little crazy. All right. Have a great weekend, friends. Thanks so much. Have a great night.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me.